geopolitics. Geopolitics got us up here, and geopolitics can take us back down, at least back into the channel. And right now, that geopolitics means Iran.
Friday, January 30th, 2026, Monaco 64, home of alternative economics and contrarian views. Well, I've got Peter Carlin on again today. We're not supposed to be speaking, but yesterday we saw like a $400 range in gold. And I remembered that he said the last time we spoke that we're going to see some big moves now as gold gets higher, like $500 moves. And I thought, wow, this is almost there. So I wanted to have you on, Peter, to talk about what's going on.
Right. Good morning. Yeah, like I said last time, we were reaching the level of the market, the tempo in the market that we were going to get. Like I said, get ready for $400 and $500 moves in a day, and sure enough, we got them. So we could see that we started moving outside the channel, and we kind of took off to the moon vertically. And of course, we were hearing the hows of $200 silver by June, $200 silver by the end of February. That's always a good marker. But the truth is that we finally went completely vertical. And if we go into the high lows of the chart from yesterday, please make sure that this is not this morning's chart, it's yesterday's chart, but the bar is still there. You'll see that we had this massive 10% move up and then 10% down. And you can see the high low described right there, 9.61% or $490 on gold, which is kind of extreme when you start talking about, a 10% move. So that kind of a move signals you're either going to come back to the retracement, and we touched down pretty nicely yesterday as we went out. This is yesterday going out. And it looked like we were going to come back and consolidate, but we're following through. And I think if we go to the next one, number 2, you'll see that that was our touchdown point from yesterday. And we can see the trend line worked well. And the bottom of our trend line there, 51.79. I think we might be through that this morning.
Yes, we are. Just as we connected, we gotten through to 50.50 as a low, and now it's 5,095, and the prices are moving very quickly as well.
Yeah. So this is what happens to people who are short gamma, who are short options. They get killed chasing the market, and the volatility now must be over 100%. Moves like this. So if you go to the number 3, which I think is channel.
Yeah, there's another number 3 here. Let's bring it up. There you go.
Give you more perspective on what's happening. So if we look at our horizontal, the horizontal really, and please note that this is a weekly chart, which is what we need in conditions like this. As my co-author of the book, Jim Sinclair, always used to say, when markets get complex and get crazy, get simple. And I think that's a great guide for what we're living through. So we have 2 things going on here. We've got a horizontal touchdown. We've got a horizontal marker out there at really roughly 5,000. And you can see where that gap was. And that long string from yesterday was the flame out that happened to the top, which took us through or just to 5,500. So now we're going to have to see if we can hold the horizontal. And at times like this in the gold market, I've found that the horizontal markers become quite important. And if not, our weekly trend line, as you can see there, touches down today at 4,500. Also, I would also say the more complex thing that you're going to have to worry about today is that we're on the last trading day of the month. And I'm sure people would love to push it right through the trend line. But if we move now to the channel, we can get some real perspective over what we're doing. And there's our long-term channel. And you can see we went above it. This is a weekly again. Please remember, we went above the channel and then we flamed out to the top. So what we're probably doing is heading back into the channel, which for all you bulls out there should be some comfort. As long as we stay in the channel, you can see the level of the slope. I mean, where have we gone from since the start of 25? The past year, we've moved from 3 to 5, which is the upper trend of the channel. So it's going to be fine if we get back in and we hold on to that channel bottom. That's what I think, everybody has to pay attention to. The people who chased up here, thinking that we were on our way to 10,000 by the end of, March, they're gonna pay the price. The stackers, in the gold and silver arena, I think are going to be quite relaxed and quite calm.
Yeah.
Um,
I mean, I got some numbers here from the end of the year. I always look at it. Gold closed around 4,300. So we're still $700 higher on the year.
exactly. And
Yeah.
quite honestly, for the long term, we need a more measured movement up than the past week.
Yeah. Yeah. No, I agree.
It's just not healthy for any
Yeah.
market to behave
What do we
like that.
got here? Oh, this is silver. Yeah.
Okay, so that's silver. That's silver going out
Yeah.
yesterday. You
Yeah.
can see the big string down and how it got recouped,
Yeah.
but now it's failed.
Yeah, now it's fed. Yeah, it was really weird. Yesterday evening, everything came back really strongly, and then this overnight has all gone back down. And there's another one here. The euro. You're saying the euro is shadowing gold a little
Yeah.
bit?
So, gold is I know everyone's going to say gold is money, JP Morgan and all this
Yeah,
stuff. Fine, it is, but gold is also a currency and
yeah,
has been used as a currency off and on for, hundreds and hundreds of years. So I think, we have two conflicting forces right here now. Number one, Trump and everybody in the Trump administration, for the most, want a lower dollar. But that chart in front of us, called shadowing gold, this is a weekly of the euro. I mean, look how many weeks we've been in that horizontal channel, and we totally broke out of it and flamed out to the upside. I think we're putting in a top for the euro. And of course, when we want to look at the US dollar as a currency, we look against gold, but we also have to see what it's doing against the euro. The yen is no longer in the game. It's a disaster story. They tried to prop the yen up. So I think what we're seeing now is, especially with this change in the politics of the Fed and getting rid of Jerome Powell, who was never really that much of a bear of the US dollar. Maybe a lot of people are, saying it's time for us to have a stronger dollar. Remember that unlike the situation that we were in back at the Plaza Accord #1 in '85, the US dollar can't be depreciated really against the yen or the euro,
yeah.
only against gold.
That's right.
So it's not really the same story anymore. So we're going to see what's going to happen. We've got two different forces pulling in different ways. And the important thing also to remember is, although I don't have a chart of it right now in front of me, a lot of this is geopolitics. Geopolitics got us up here, and geopolitics can take us back down, at least back into the channel. And right now, that geopolitics means Iran. They're moving the heavy equipment into the Gulf. It looks like we're going to get a showdown with Iran. So if they're moving the heavy equipment into the Gulf. It looks like we're going to get a showdown with Iran. So if we do, and Iran retaliates in any serious way, we could reverse again and go right back up. So what I would say to anybody who's trading, cut down your size. Whatever you do, for God's sakes, get off margin.
Yeah,
Get to some reasonable level,
I
because
know.
we could be $400 lower or $400 higher on gold by Monday morning. Now, if the attack gets called off and something happens, we're gonna go test support down
Yeah.
towards the bottom of that channel.
I had a
So
chart here, Peter, just wanted to show you because if you look, I took the date, the date's not here, but it doesn't really matter. But we've had these consolidations and then breakouts, consolidation, breakout. And I usually measure once we break out, I measure the previous move and extrapolate it. And actually, last time when we were going up here, I said expect some, expect a top or some correction around 43, 4,400, and it happened. And then I measured it here as well. And I said a few weeks ago when gold was starting to take off, I said I could see us going almost straight up to 53, 5,400, and then you're going to see a correction. So yeah, I expect to see another consolidation like well, last year was from April to August. It was quite long. This one wasn't as long. So I guess the only positive for the bulls and the stackers is that I think this could be a lot quicker. But right now it looks like we might be consolidating. But again, everything is so uncertain, like you said, that we could just keep going higher. And like you said, Jim Sinclair, like keeping things simple when the markets got crazy, and I do too, actually, because this is the monthly chart, and when you look at it like this, you kind of ignore even what's happened the last couple of days.
Yeah, I mean, what the problem is that there's two things. Number one, as you can see on that last bar that you had, we're getting a little bit ahead of ourselves. In terms of an orderly market, we're getting ahead of ourselves.
Yeah.
The order is no longer there. So everybody can cheer the fact that we're now going straight up, and we've achieved so much in the past year in gold terms. I mean, the year on years are tilting at what, 70%, something like that. For silver, just under 200 or something. So everybody needs to calm down and catch their breath for a bit.
Yeah.
And also, every single person on their own is going to have to try and judge two things. Number one, how much of the current price is as a result of geopolitics. If we unwind the geopolitical problems, which could theoretically happen, then we're going to see how much of the war premium is there. Now, we had the last test. That's why I'm saying keep your mind on oil. Not that there's any direct correlation, but oil could give you the nod as to how the market's seeing the potential for conflict with Iran. If we get the conflict with Iran and Iran retaliates, we're in a whole new world.
Yeah, I've got a chart of WTI here. I'm going to bring it up. And it's still, let's see, I'll bring it up here. It does look like it's trying to break out, but it's still under control.
Right.
There you go, 64.50 WTI. So if you see this move up towards 75, then there's something going on. So keep an eye on that. The other thing I want to ask you.
So keep it.
Yeah. Sorry, go ahead.
No. All I'm saying is that, you have to look now at the big geopolitical arena, the one that's really wide spectrum. And that means, how you try and look at the way the world is being redesigned by the Trump administration. They've got the Chinese out of the Panama Canal. They're cutting the Chinese out of Venezuela, although it's a contentious point. Russia's making rumblings about Cuba and how they're still an ally. The U.S. probably has other ideas due to its hemispheric policy. The war on Iran changes the calculus because Iran is a critical component of BRICS. However, there is one other point, too. Putin and the current Russian administration is not in love with the mullahs who are running Iran. They don't really care. If Iran is exporting oil to China and is politically neutral or changes regime, Russia will live with that. They will not live, however, with the breakup of the country. It's fracturing into a million pieces, with Baluchistan, Loristan, Kurdistan, the Sunni movement in the south,
Yeah,
being controlled by,
Azerbaijan as well, I think, isn't it?
right, the Azeri movement. Remember, this is where we started the Cold War in 1946. It
Yeah,
was technically over the Azerbaijani Tuta Party movement that was allegedly controlled by Moscow, but which is also a debatable point. The Marxists will tell you that Moscow abandoned the Tuta Party in 1946. Others will tell you that it never had any intention of, joining forces with Moscow at all. But nonetheless, that divided nationality, transnational ethnic structure in Azerbaijan, which people wrongfully call Turkic, it is not, it is distinctly Azeri, was a flashpoint and is still so today. Do
yeah,
the people in Azerbaijan want to create a country with Azerbaijan in the north? Personally, I don't think so.
yeah,
But one thing to look for is if there's some attempt to create a political disturbance in Azerbaijan that shows some type of political affiliation with Baku, that may be the flag that they're planning to try and fracture Iran into pieces.
yeah.
That is going to bring a Russian response.
And
This country is going to remain a producer of oil for the benefit of China. I don't think China is going to view this like Venezuela. It's far too important, and it's far too important for the BRICS program.
there's a lot of oil there as well in the Black Sea, Azerbaijan, isn't it?
You
Baku.
mean in the Caspian?
Sorry, yeah,
Yeah,
Caspian. Yeah,
yeah,
Caspian, yeah.
yeah, a lot. And there's still an operational pipeline in the Caspian. Remember running, the Baku Ceyhan Tbilisi
Oh, yes.
pipeline that
Seyhan is in Turkey. Yeah, yeah,
that's right. That exits out there, and that's a consortium run by BP and Chevron, I believe.
yeah. I wanted to,
So go
yes,
ahead,
go
please.
ahead. Yeah,
No, so that is important, and the other thing too is that Kazakhstan in itself, is an important producer. All these people are coming online to feed China, and I don't really feel that Russia is going to be as laid back about this as they were about Venezuela.
yeah,
This becomes, if it goes ahead and there's a serious attempt to politically fragment the country, I think it could prompt a response.
yeah.
We're entering into a really dangerous period.
Yeah,
So
and Iran, like geographically, it's right in the heart of the Belt Road Initiative for China as well. And I
absolutely.
don't think they would be happy about that. I wanted to ask you about silver because there's still, you can see here, someone posted. I think it was earlier today or yesterday that when silver is trading at 113.50 on COMEX LBMA, the Shanghai price was 137.60, so like almost a $25 premium. Do you think that that's significant? How easy is it to like take delivery on Comex and ship it to China and get the profit? And do you think that's going to help keep silver elevated?
I think if you can ship it to Singapore, which you can, then you can get it to Shanghai most likely.
Yeah,
Um, the the point of the matter is that the market is starting to bifurcate, and as each day progresses, the Chinese role gets bigger and bigger. This is part of the whole large scale movement that we're starting to head into, where you see Hong Kong as the clearing and trading point for China, which opens it up to the international market, and they've become the price setter, rather than the price taker. What's going to be interesting for all the perma bulls out there is, let's see how many people are going to stand for delivery on silver if we get a big wipeout. Let's see if they run and hide, or let's see if they
yeah,
stand up and see how many deliveries actually go through. We are seeing a bifurcated market. I have not been able to truly establish whether those premiums in Shanghai that everybody's talking about are anything above $10. So you can look at the exchange and you can try and arb it back to Globex overnight and do the math on it, convert the kilos using the yuan out into, prices per 100-ounce contract. I don't see the premiums that high. If there's an ARB there and you've gotten an account in Hong Kong, well, then I suppose you can spend all day printing money. But I don't think that's going to really hold for very long.
Yeah.
If you try and go and deliver physical into Shanghai, well, you might get it, but as far as I can tell, there's no ARB with Dubai, and there's no ARB with Singapore, and the Hong Kong dealers tend to have wide spreads, which is why a lot of people might be saying there's this huge premium. But for instance, for all the people who are in the silver market, Dubai buys spot. They still buy spot. Singapore still buys spot. At the retail level in Hong Kong, they want spot minus 5%.
Yeah.
And I don't think anybody's going to be selling there. Why
Yeah.
would you?
Yeah.
So,
But have you seen though that on COMEX, the January contract, which is on silver, which isn't really a front month, they've taken delivery of 50 million ounces, which is quite big. So
quite big. Let's see how they stand for it.
yeah,
Let's see if they're running high today because it's Friday.
yeah,
I think, what do they have? I think they might have till noon to cancel, or it
yeah,
might be too late.
yeah, yeah. I heard Trump making a comment about house prices, that he wants to keep them elevated so that the people who bought their houses years ago will feel wealthy and be wealthy. And but at the same time, he wants to cut rates to make sure younger people can buy houses. But it seems like he wants to have his cake and eat it there. But the
Exactly.
reason I'm talking about this is because in the book you co-authored with Jim Sinclair, A Pocketbook of Gold, on page 70, I think it is, you talk about gold being a revealer of falsely stated wealth. And you say, but the promises of wealth are false. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. So could you elaborate a little bit on that?
Okay, so that was written as it was. After the 2008 2009 debacle, and as you can see, you know, we had a similar move up in house prices in the post COVID era, where people started to get crazy about individual houses, and then we got huge institutional buying. Now there is some rumor that Trump's going to try and legislate against institutional buying of houses, but that's not the real problem. The real problem is that the US employment market now is so weak and getting weaker that people aren't capable of even getting up to the plate to put down a down payment. And there's so much personal debt overhang too. And when you see the mortgage rates are going to start to tilt towards, I don't know what, 5 now, maybe with really we're heading towards 6. I don't see how we stop the movement up in interest rates still.
Yeah, I don't know.
So that's going to take the air out of the market. So what do I mean by and when I say a revealer of falsely stated wealth in the book, all you have to do is look at the number of ounces it takes to buy a house. If you looked at that, it would be affordable to you.
Yeah, I know. I've done the same thing here in the UK, and I think we're almost down to 100 to 1. And in 2004, you needed 700 ounces for the average house price. The other thing is, well, when my wife and I first bought our first family home in the 90s, I didn't think it was an investment. I just thought it was somewhere that we're going to live. And even if you think it's an investment, if house prices drop all along the nation, throughout the US, does it really matter? Because if you think it's worth 2 million, but it drops to 1 million, but then other houses also drop, you can still sell it and move somewhere else. It's like,
Absolutely. And in the long-term macroeconomic picture, you know, you you've got to have a market that the next generation can go towards.
yeah,
So just inflating house prices,
yeah,
is a bad move. There's been too much institutional buying of houses,
yeah,
and I don't think they're going to have a lot of people crying over it if they get stuck with a declining asset and are
yeah.
forced
It's
to
a,
are
it's
forced
a,
to cough up.
I mean, I've seen people compare the house prices to bond prices because it's similar, isn't it? Because if you lower interest rates artificially, you're able to borrow more, so you bid up prices and the prices go up. So, and it's the same thing with bonds. And I would say that's the whole problem with, people always keep saying, oh, it's because you've got immigrants buying too many houses. There's not enough homes. But my take has always been, well, it's because the central bankers and governments have kept interest rates artificially low.
Yeah,
So,
it's QE. They bought
yeah,
in the long
yeah,
end of the curve to try and get rid of the MBS, the mortgage-backed security
yeah,
disaster.
yeah.
7 years worth of that, and now they're cornered.
Hmm.
And that's why Jim always used to say, "It will be QE to infinity. There is no other
Yeah,
choice."
yeah.
And
Apparently,
you could
yes,
see
I
that
know.
that they could get ready to start this thing up again, especially if they have to get interest rates down. But I think the other thing too is, remember, we're reaching that point now of competitive currency devaluation, and we're at a real inflection point because the US wants its currency down again, like we said at the beginning of this discussion. But what does it have it to move down against? It can't possibly be the yen, the euro, or sterling. It's and it would love to have its currency lowered against the yuan, but you're up against Beijing, who is unlikely to let that go very far. And
Yeah,
that's why they say we have a non-convertible currency. Now, as they slowly open up the economy to the world, as we're seeing with this clearing arrangement on gold, the pipeline coming from Shanghai out there, the plans to take Guangzhou province and Shenzhen province, excuse me, and start to basically remove that barrier to Hong Kong over a 20-year period to make it into one huge Bay Area, which is the plan. You'll start to see slowly they will allow the yuan to appreciate. But they don't want to appreciate too much because that would be the natural thing because they're in a deflationary period, because then the deflation could get out of hand.
yeah,
So everybody's trapped between two parameters,
yeah.
and no, it's a kind of Mexican standoff,
Yeah,
and nobody knows quite what to do.
I guess back in the early 30s, the devaluation was against gold. But I guess you could, the dollar, I mean, if,
Yes, if we go back to that period, to the 20s and 30s, you can see what happened. Everybody devalued against the dollar, and the dollar had nowhere to devalue against. After Austria, after Germany, after France, after Britain, after everybody went, to a devaluation stand, with Britain and America being the last, and then eventually, I think around 26, 27, Britain throws in the towel too, and then you have the defaults that come after that. You know, then you have the United States saying we must devalue as well, and we have to inflate. But like I say in the book, there had been 9 other nations that had
yeah, and
done it in the preceding 18 months. So they said it's got to be against gold.
yeah,
There's nothing else to devalue against.
Roosevelt did that, yeah, in 1934 from $20.67 to 35.
That's right.
And there's a lot of rumors that the US is thinking about revaluing its statutory price. I read that this new guy, well, we don't even know if it's going to be him. It seems like Trump changes his mind every day. Kevin Warsh, he's for lower rates, but he wants to shrink the Fed's balance sheet, which is basically tightening. But how could they shrink the Fed's balance sheet? I think they could do it without affecting the bond market. If they revalue, the Treasury will get a windfall, and they could buy back the Treasuries from the Fed's balance sheet. That's the only way I see it. That's
Sounds like a plan.
Yeah,
But
we'll see
but
if
but
that happens.
the big question that has to stay on everybody's mind who are in the precious metals market, that it's worth remembering, is the mark that we just saw too could be fairly indicative of the future. As you rightfully pointed out, there's a limit to how many policy choices you can make. Also, there's a limit to how much policy dictates outcome. Where you are in history is far more important. We're still in a sovereign debt crisis. It's not going away. This year, next year, is going to be the time of the defaults. When the defaults start, hold on to your hat because you're going to need it. And you better be holding on to at least some gold and silver at the same time.
Yeah.
Because, you know,
I've got
I
here a little
still.
bit of gold in my sterling silver purse.
Is that your bug out purse?
Yeah.
Yeah. So it's an extremely volatile situation. The market got ahead of itself. Pay attention to the channels that we put up on the screen today. Keep an eye on the bottom of the channel and where we go back to. Silver is going to become a very difficult animal because support doesn't really kick in till almost 65 or 70. So that's a big trip down from where we've been. But the market got ahead of itself. We have so much going on. We've got to look at the geopolitics. We've got to see what happens with Iran. If Iran retaliates seriously, the question is, does the regime hold? If they retaliate against Israel, how does Turkey react to it? And more importantly, if it spirals out of control, will Russia react in some way? I mean, these are all considerations that are on a day-by-day basis, and it's going to keep the market on edge. And that's why we're getting these movements. There's going to be a war with Iran, up 10%.
Yeah.
It may not be a war, down 10%.
Mm.
Now the war, it's on, it's off, it's on. So get used to it because we're just starting.
All right. So
Right.
it seems to me that the bigger picture is sovereign debt default. So you want to have your gold and silver. But in the meantime, the geopolitics is going to make it pretty wild. So I'd say hold on to your gold and silver for dear life. Trade with caution, right?
Exactly. Got it.
Great.
That's
Thank
the
you.
way.
Thank you, Peter, and wish you a great weekend.
All right. And you too.
Thank you.